what we will be talking about.
Yeah, there's no shortage of stuff to talk about.
Mhm.
Software, it's getting stupid out there, bouncing nicely today, but it's far from trustworthy.
Agreed. Yep, 100%. A lot of
Yep.
technical damage, a lot of overhead supply, and I don't even trust the bounce
Well,
on
this
the
is
S&P
well,
500. To be honest with you, so we'll see what happens next week. But this is like typical bear market behavior. So yesterday we went down 150 points. Today we go up 130 points. So I don't know. I'm a bit
well, it's typical
um
bear market behavior if you keep going down after the fact.
yeah, but that kind of very wild swings, either up or down. So, but the VIX went down today, so we'll see. I mean, I just went to see the way that we close today's session. So it's 2:28 p.m. So the trading
Eh,
session is still going. We're closing below the 20-day moving average, but these kind of very wild swings are typical of a bear market. But I mean, I'm not saying that we are in a bear market, but I'm just being like a bit skeptical about today's rally. We'll see what happens over the weekend and next week. And the damage, the obliteration that we saw this week on software stocks is nothing short of extraordinary. I mean, like
yeah. So
unbelievable.
is the S&P 500 still a technology index, Alvaro?
Um, it's heavily influenced by tech stocks. So
So how far off the highs is the IGV?
the IGV is what 20%, I think 18%. Yeah,
Probably
but
more.
the only important stock inside the S&P 500 that is inside the IGV is Microsoft. Other than that, it's not really that important
I don't
S&P
know.
500 wise, right?
Technology and software are pretty well linked. I'm
Yeah,
just looking
but
at the S&P off
but
100
other than
points.
Microsoft, you didn't have very important stocks inside the S&P that could affect the index, on market cap wise, inside the S&P, other than Microsoft, which is a $3.5 trillion company. And
Yeah,
yes,
yeah,
by the
but
way, so yesterday we had a massive.
if it were a technology index, wouldn't it be down like the IGV?
No, because when I say that it is a technology index, I am talking about the Max 7, which if you combine all of them, we're talking about like what, 15 trillion,
Sure,
17 trillion
sure.
dollars,
Yeah. hmm
yeah, worth
Something
of
like
market
that.
cap.
It's a
So
big number. It's a big number.
it's a big number, correct?
Yeah, yeah, yeah.
Yeah, and we haven't had an episode, bro, in which all of these stocks, the seven, I mean, go down significantly at the same time. So this hasn't happened since the tariffs fiasco
Yeah,
that we
yeah,
had
yeah.
last
No,
year.
I see what you're getting at, but
Yeah,
nothing worked then. I mean, everyone thought it was potential for a global recession. I don't know. I just look at Microsoft or not Microsoft, Amazon down 7% today, and you have the S&P up almost 2%.
yeah, because you have Nvidia pulling up and doing the heavy lifting. Nvidia's going up today a lot. It's
No,
going
no,
up.
yeah, it is. It is, and
Yeah.
it should. Capex number was crazy.
Oh, by the way, did you listen to Jensen? He came on the air on CNBC
I did. Yeah. Yeah,
at
I mean,
noon. So
it's exactly what you would expect. Scott does a good job asking them questions. He was with Gershner. I don't know. Like I for one think the market is getting this wrong. Like horribly wrong. If
it's happened
anything,
before. It happened with
yeah.
the DeepSeek, remember, situation last year. So
Well, yeah, but you didn't see quite the destruction and everything last as long or feel so dire. Like this rollover in software and
it's
other
impressive.
names.
It's like
It's been a couple weeks. Not to say that that is like the end all be all, but this reminds me of 2023, the beginning of 2023. It looked like all of these companies were all the Mag 7 before they were the Mag 7 were going to roll over, and everyone was like, "Why are you hoarding all of this talent? Like, what's the point? You're killing your margins. Why don't you lay some people off?" And their response was, "Well, we just saw COVID. There was an unexpected rush of demand coming out of it, and we think that there's the potential that we could see that demand again." And the market cut those companies in half, and AI came around, and it turned out they weren't stupid to hold on to those people when they did. And if you were selling Microsoft, Amazon, Google, Apple, Meta, Microsoft down 30, 40%, you looked really, really out of touch over the past 3 years. So if you're out there selling these stocks right now, especially when some of them have like RSIs of 20. And for those that don't know, RSI typically 70-30. 70 is overbought, 30 is oversold.
Oversold.
20 is there an apocalypse happening?
What time frame are
yeah.
you utilizing for that reading?
14-day.
14-day.
14-day RSI. It's relative strength. Most people use 14-day. I don't know anyone that uses a different time frame for it. I'm sure there are people, but typically
some
speaking,
people
when you hear
utilize
someone
like the daily or the weekly in order to determine that a stock is like very oversold or very overbought. I don't use the RSI. Me personally, but yeah, I mean the fall in many of these stocks has been impressive, man. And we're talking about large companies. We're talking about Microsoft. We're talking about CrowdStrike, which is arguably the best cybersecurity company in the world, and it's like non-stop selling, man. So
yeah, CrowdStrike
buyers
yesterday,
are nowhere to be found. It's impressive. I mean, this is the main subject of the week.
Yeah,
Needless to say.
CrowdStrike yesterday had an RSI of 20. The last time it was that bad was in August of 2024, which was coming after their massive disaster outage that happened in July of that year.
Correct, with the outage.
So, in other words, CrowdStrike hadn't been so beat up since then. If you're selling stocks when the RSI is at 19 or 20 and it's just because the quote unquote story has changed, you really shouldn't. You should have someone manage the money for you because you're just not built for it, frankly.
I wish someone could explain to me how the best cybersecurity company of the world is going to be disrupted by artificial intelligence. I don't get it. I mean, if someone can explain this to me, if any of our viewers is a super expert, tech expert, or I don't know, or artificial intelligence expert, please drop a comment and let us know. I don't see any reason for CrowdStrike to be down 31% of the highs, supposedly because artificial intelligence will be disrupting its business model. If you tell me that competitors are coming over for CrowdStrike, then okay, perfect. So the company, the markets are foreseeing like difficult times ahead for the company.
I don't know. I think that's too far a bridge.
Sorry, was it?
That's too far a bridge for me. Like the idea that a competitor is going to show up in the next couple of months or year and actually threaten the relationships that a CrowdStrike or a Palo Alto has with their clientele, it's reflective of somebody who doesn't actually know how businesses work. Like that sounds really great for a Wall Street analyst. That makes absolutely no sense to someone who's had a strong operational relationship in a business critical part of operations to just, oh, you know what? Hey, we're gonna go with a competitor because why not?
No.
That's just not how this works.
Correct. But what I'm saying here is like, so say that hypothetically, there is a new super competitor in the cybersecurity cohort. That I don't know, that is starting to gain market share from CrowdStrike, but that isn't the case. So this stock is supposedly going down because the company, and I don't know, and cybersecurity as a whole will be disrupted by artificial intelligence. That's what I don't get. That's what I don't understand. It's crazy. And oftentimes, and this is a tough one for a long-term investor, so you need to disagree with the net aggregate opinion of the markets. Take a look at this technical chart. So how do you approach a buy on CrowdStrike? From a technical standpoint, it's impossible. The technical chart is absolutely broken.
I would say I would say RSI is telling you that the worst of it is behind it.
Correct. But below all the moving averages, it made a brand new lower low yesterday. You don't know if this is going to be a lower high and it will keep going down. So sometimes, and if you're a long-term investor and if you really like the company, you need to make a bullish case basically based on the fundamentals of the company.
Yes. Yeah. But what I would say is you need to think about what is the bear case, and you've already laid it out. And if you agree with it, then sure, stay out of the name. But if you disagree and you see a stock like this hit a 20 RSI, that's not to say that in a month the stock price is going to be meaningfully higher or lower. That's just to say that ever since their crazy outage that basically threatened to change their reputation. Like an event that, I mean, I'm wrong, it was catastrophic. It threatened to destroy a reputations that they've been building for decades. They recovered from that. You think that they can't recover from a change in the narrative? All I'm trying to say is at RSI 19, you can make a pretty sound bet that 6 to 12 months from now, you will regret not taking action right now. That's what a 19 RSI says.
This looks like an overshoot. It does. This looks like an overshoot.
It's a
but
trap
you never
door.
know if the markets are suspecting something very negative here. So you never know. But this is arguably the best cybersecurity company of the world. It is trading at a discount relative to itself, and mind you, this is a higher multiple stock. But yeah, so it's a tough one. So buying these
I don't know. I
difficult.
think it's I don't think it's difficult here. I think you do it. I did it yesterday. I think other people
did you buy
did too.
Crowdstrike?
Yeah. Mm-hmm.
Yeah. But of course, is this a trade, Dan, or Danny, or is
no?
it?
Of course, no. But I mean, if you wanted to trade it, you're up 5% today. If you bought yesterday at the RSI down, whatever, you could close your position now and be happy, I suppose.
Correct. So since you have a lot of overhead supply, and
mm-hmm.
Correct. So you need to you need to take your profits quickly, because we have a lot of buyers trapped all over the place. I wouldn't trust this bounce until the 5 DMA is recaptured at $410. So
sure.
Hey, by the way, we haven't started the podcast officially then.
Yeah, welcome in everybody to episode 31 of Charts and Checks. You're here with your two hosts, Alvaro Pereira of the Bilingual Stock Market Challenge, and myself, Don Foy, under the gorilla with glasses. Obviously, the slide-in software is in focus, but we also had a bunch of craziness in the precious metals. Those things that just keeps rocking. That's a story that keeps on producing headlines. And we had a bunch. I think we had Amazon report last night. Google reported a couple of days ago.
Talking about that.
So most of the Mag 7, actually all of the Mag 7, right, are in the rear view. We're done. Well, Nvidia is near the end of the month. They're always a late reporter.
February
so maybe
25th,
we'll,
I think.
Yeah, something like that. Maybe we'll end up talking about that. But before we get started, Alvaro, the Super Bowl is on Sunday.
Yeah.
The Seahawks versus the Patriots. Who do you have? You have the Seahawks?
I have the Seahawks. I mean, I have a lot of friends in Boston. So I am rooting for the Patriots, but I think that the Seahawks will be winning, in my opinion. Yeah.
I love the Seahawks as well. It'll be the difficulty is if you had to tell me that one team gets blown out, I would guess it's the Patriots. Just based on how well the defenses are playing for each of these teams. Like we saw when the Seahawks played the Rams earlier in the seasons, I think Sam Darnold threw 4 interceptions and they lost that game by a field goal. So, like, the Seahawks are incredibly stacked. And New England, with all due respect, you can wait another year. You got, you had 3 bad years, and then you went from 3-14 to 14-3, and now you're in the Super Bowl.
Yeah, now you're playing the Super Bowl.
Yeah, you don't need this one. But I will. For my friends in New England cheering for the Patriots, I hope it goes well for you. I'll actually be there.
I have a lot of friends in Boston, like a lot, so I'm gonna be rooting for them because of my friends. But I think that the Seahawks have the upper hand. Let's just put it that way.
Well, they're 4.5-point favorites. I'll be there in Santa Clara, and I'll take some videos with the meta glasses. Yeah, I'm going to the bowl.
Oh, that's great, brother! Yeah. Make sure you share some pictures with us.
Of course,
in the Discord. Awesome,
taking my parents and my fiance. It'll be a really good time. We're Browns fans, so who cares?
Yeah.
I was talking to a buddy of mine. He's like, how are you feeling? Are you excited? And I'm like, I'm really, really pumped. It's been a bucket list thing. It's a cultural event. I love football. But like when he asked, like, do you care who's playing? And I'm like, dude, I could never imagine the Browns in the Super Bowl. So it doesn't matter. In my lifetime, the Browns might not make a Super Bowl. Didn't happen in my Nano's lifetime. So why mine?
Yeah, the team of my city. I mean, we're talking about the Carolina Panthers, so go figure.
We are
in the same situation, bro.
Well, at least what? Cam Newton brought you guys there. It wasn't a good ending, but you guys got there, right? Or am I misremembering that?
Almost. We almost made it to the playoffs.
My bad. I
almost made it to the playoffs. Yeah.
All right. But let's start with Amazon, shall we?
Yeah, sure. Hey, by the way, have you been to Seattle?
I have never been to Seattle, but this game is
a beautiful city, bro.
I've heard.
That I went in December, late December. It's a
Yes,
very beautiful
great
city.
pictures, great
Yeah,
pictures.
I mean we're talking about the Seahawks, so make sure you take your
Well,
fiance to
the
Seattle
games in
at some
San
point.
Francisco, or well,
Yeah, I know,
the
but
games in Santa Clara. Yeah,
but the
sorry.
Seahawks play in Seattle, so yeah,
Yeah, yeah, yeah,
that's
yeah,
why I
yeah,
brought it
yeah.
up. Okay,
Mm-hmm. Yeah,
Amazon.
yeah, sure.
I think we might have lower prices on deck for amazing Amazon.
Yeah, well, you
The capital
definitely need
expenditure
buyers.
guidance was absolutely insane, brother. They were
Yeah,
expecting 144 billion, and they are forecasting, by the way, so it could go even higher than that. $200 billion. I think free cash flow goes negative at some point this year.
that's
And
definitely the bet people are making. Yeah,
yeah, I did the math, and the numbers don't. I mean, the math doesn't add up. We're likely getting some report this year reflecting a negative cash flow. So I don't know. The valuation is very attractive. By the way, Donnie, today at 9:30 a.m., Amazon opened the trading session with its lowest valuation ever
Oh,
on
yeah.
record.
Well, I mean, the company. Yeah, yeah.
Okay,
Yep.
9:30 a.m. was a historic day for Amazon. Lowest valuation ever on record. So if you're a bull of the company and you don't mind having that money for a year or so, then I mean, be my guest.
Right.
Let me pull up the technical chart if you want to. Do you have
I got. Yeah.
because I mean, from a technical standpoint, this is going to be an easy podcast.
Right. Well, here, let me show
these
you.
technical charts look ugly.
This is easy. This is easy enough.
Yeah, this is an easy one.
This is how long? This is 2 years daily. I just wanted to show people. We opened today at like 199, a little above 200. I would say this, if you think this is overdone and you think the bulls quickly reassert themselves, you could buy this today, but just have a stop loss at 200 because below 200, you lose the February high from 2024. Or I'm sorry, this is the July high from 2024, excuse me. And you start going back into the price range that Amazon was in during the tariff tantrum here that I'm kind of circling. Yep. So you could do that. And then like if you want to talk about quick upside, I then go to a shorter technical time frame. This is going to be a 6-month chart with the 513 and 20-day the 5 and 13-day exponential and the 20-day simple. And you can just hold this until you meet up with this blue line that's descending. That's the 5-day, because you could assume that you're going to get a little bit of resistance there. So if you want to buy this, put a stop loss at 200 and take gains whenever you retest the 5-day exponential moving average, I think that's a pretty well-defined, risk-adjusted way to play Amazon after the quarter.
Yeah, so I got 50 shares yesterday once the report came out. So the stock exhausted the expected move to the penny was $22. We entered the position. I took the trade with the members of the tier 4 of our Patreon in Spanish. So I purchased 50 shares at $198.50, and I locked in the profit at 205. One of the guys in the Discord told me like, "Hey, this is a very good price. I'm gonna let the position run a little, a bit more." And it was like, no. With this capex, I mean, I don't see much upside here. So I locked in the profit super quickly.
Nice.
I mean, there's a lot of technical damage here. And with this capex, and let me show you some. So let's take a look at the report quickly here.
Yeah.
Some stuff about the report. So look, the report was unbelievable. Revenue was expected at $211. Amazon did $213 billion. So from 211 billion, which was the expected figure by the analysts, they did 213 billion. Unbelievable. So almost 14% on year-over-year revenue growth. Take a look at the net income. I mean, the net income is kind of flattish relative to the previous quarter, $21 billion. But come on, guys. We're talking a company that is making a net income of $21 billion and nothing to complain about. Free cash flow, almost $15 billion on free cash flow. But, I mean, they are guiding for $200 billion on capex.
Right.
So, yeah, free cash flow, unless something very, very weird happens, is going to go negative at some point in 2026. And I don't know, the markets need to discount that. Let me show you what I was telling you about the valuation. Look, this is the forward P ratio. So this company is trading as of now at 27 times forward earnings. No one has ever, I mean, let me rephrase that. No one has never, ever purchased a share of Amazon at a cheapest price ever than today. No one did. Forget about the COVID-19 crash. Forget about the 2008 financial crisis. No
Right.
one never ever purchased one single share of Amazon trading at 27 times forward earnings. So I don't know.
The company has ever been this cheap making this much money. Yeah.
Bingo. Yeah, correct. So I don't know. What are the analysts thinking about Amazon? Let's go see. So we have 46 analysts covering the stock, 21 strong buy categories. Some analysts, I mean, the most bullish analysts are expecting Amazon to be trading at $325 in 12 months, 280, the neutral analyst. And the bearish ones are expecting Amazon to be trading at $175 in 12 months. So I think the stock will be dead money for quite some time. And I don't know. I mean, if you're really an Amazon bull for the long term, I mean, this is what you were waiting for. If you believe that this super exaggerated capex that the company will be investing in the next 12 months will end up being a good investment for the company, I mean, this is what you were waiting for. This is an opportunity. I think the stock remains.
I looked over at a headline.
The stock will not do much.
Sorry about that. I looked over at a headline from the Discord there. Apparently, Trump is now noticing the Dow hit 500 or 50,000. Excuse me.
Okay.
Which is funny to me. Sorry. I just want to take a look at that. Yeah. Okay. Yeah. No, it did. That's hilarious. Okay. Anyways. Yeah. Sorry. I just kind of smirking at that. Yeah. No. You're not wrong. If you've been waiting for your chance to buy Amazon, this is certainly a good place to do it. Down 7-ish%. More off the highs.
Hey, let me interrupt you quickly.
Yeah.
Just to make fun of this quickly. And of course, we're not getting
We'll move on.
Political discussion. Did he congratulate America when the Dow hit 30 and 40,000 under the past administration?
Oh, almost undoubtedly no.
Okay, keep going, bro.
Yeah.
What are you talking about? Go ahead.
Sorry. I was trying to pull up a chart just to show people where Amazon nearly found support. It's actually very reminiscent to CrowdStrike the other day. It found support at the 100-week simple moving average. Let me pull this up. Share this. Yeah. Let's make this a slightly. This is a 2-year.
What is that? Like the orange moving average?
Yeah, the orange moving average is the 100-week.
No, there's a big
this one in white
bro.
is the 20, the blue is the 50, and this is the 200 down here. So, at 206, 207, that's where the 100-week is. You would expect buyers to step in. The last time it violated that was during the tariff tantrum, and before then it was coming out of the 2022 bottom is when it came back across there.
Hey, I'm curious, what price do you have that 200-week moving average at?
Let me see here. It looks like it's at exactly 206.52.
That 200-week?
Oh, 200.
No.
Sorry.
So the red one.
Right. I thought I said the 100-week. Sorry. The 200-week is 165 and a penny.
Do you think we have a shot?
I mean, price? You'd have to go through the tariff tantrum low. And I just feel like you'd have a lot of people step in right around here at 195 where it gapped up coming out of the tariff tantrum. Just the idea being that even if we are concerned about their capex and their free cash flow, is it really as bad as the moment in time where the market priced in effectively a global recession? So like that to me is what you have to square. I'm not saying it's impossible. I think the market has, again, we went from AI is a bubble to AI is going to kill software. The pendulum has completely swung. I don't know how much further.
And also, too, you guys are investing too much money on AI. So
yeah. At the same time, right. So it's like there really is no winning, I guess, if you're a Mag 7 company, if that's the rules we're going to play by. But I think at a certain point, you'll have people sell small positions. So, listen, I love the rotation into healthcare, the transports, financials, etc. But if you see Amazon down at 195 or 175 or 165, people will sell that to buy Amazon, no doubt. Like you're not
Yeah.
going to hold on to your Walmart or whatever
So
to go buy it to miss out on Amazon at 165,
I
especially if the
kind of
story hasn't changed.
perceive that since the capex guidance was so aggressive, I don't feel in a rush to buy the dip here, bro.
No,
So
I don't
that's
think you need to be in a rush.
yeah, correct. That's
And
that's
here,
a that's a message. That's the main message that I want to get across here. I think that we have potentially lower prices coming up for Amazon, and I gotta tell you something, bro. So with Amazon forecasting 200 billion in capex, and
Mhm.
Google, how much did Google? Google did
Oh,
144 billion.
yeah, something like that.
Okay, go, bro. So both companies, if you take into account the capex that they are guiding for, they could be buying AMD, and they will still have $40 billion left. Bro, I
This
don't
is
know.
this
Buy
is
Warner
this is
Brothers and
more
help out
this is
Netflix.
more than the GDP of countries.
Correct. So
I mean, this is a big, yeah, it's not a small amount of money.
correct. So now, since yesterday, Danny, and you know that I have been kind of defending the capex that these companies have been presenting. So when I saw yesterday's capex, I was like, wow, the markets are. I mean, the markets should be should be worried about this. This is a lot of money, bro.
It is a lot of
So
money,
it is a
but
lot of money,
if
and
you,
now
I listen,
you will be having a negative free cash flow during 2026. So I
well,
wasn't
that's the
expecting this.
expectation. But yeah,
I
no, no,
wasn't
no.
expecting
And
this.
there's the thing. I think
Hmm.
right now the market it won't sell this thing. Like, will there be lower prices? There could be, but I feel like the worst of it is maybe done for now. The the thing, the main factor that Amazon has going against it is that you do have an alternative, and that would be Google or Meta, who aren't going to go free cash flow negative yet, or so we think. So to me, it makes sense that you would see money come out of Amazon and go towards other companies where the free cash flow story is a little bit more secure, because the market isn't stupid in this respect. If you keep doing capex like this, you're going to need to go to the debt market eventually,
You know,
and you
like
need free
just like
cash flow to
Oracle.
service it.
Correct. 100%.
hmm
Yep.
Unless, again, Andy Jassy, even though he doesn't really know how to get the street excited for the stock, he's not stupid. The dude made AWS what it is. People sometimes forget that. He's not going to do something as fiscally irresponsible as
Okay.
what's been done at Oracle. At least that's my opinion of him.
This is a 4 hour short of Alphabet. They
Yeah.
reported extremely better than expected.
Mm-hmm.
I think this stock is going down. If this 50 DMA breaks to the downside, $322, the stock is going down. And I think that they did forecast capex for 2026 at $140
Oof.
billion. I
Yeah.
mean, it's a lot of money. So I think that the markets, and rightfully so, I would say, are sending these companies a message like, okay, guys, enough is enough. You have to, so take it easy. Take it easy, guys.
Yeah.
And
Yeah. Sorry, go ahead.
no, 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 that's okay. So, um, I don't know. I am, I think that I am still like kind of digesting these
Uh-huh.
capex guidances, this capex guidance from Alphabet and Amazon. And I don't know. And needless to say, I mean, in the case of Amazon has to be like how of the highs is Amazon, Danny. Alphabet is, I'm
$80
yeah, I
or
mean,
something.
8% of the highs. I
Sorry,
think, and this is not a prediction. I am not in the prediction business.
60.
In my opinion, potentially we have lower prices coming up for both Amazon and Alphabet. I think that I think that it will take time for the markets to digest
Uh-huh.
these guidance on
Sure.
the guidance that they provided on capex. It was too much for me, and maybe Alphabet could be a short here if this rising, by the way, 50 DMA is
Mm.
broken to the downside at $322. So
I don't
what are
know.
your
I
thoughts on
actually
Alphabet, Danny?
I feel like Alphabet actually came out the best in that they don't have the same free cash flow issue, and they got YouTube that is again growing like a weed. Waymo is impressive. I got a feeling if anyone's going to buy anyone's going to buy a dip in any of these names, it'll be in Google. I think a lot of people feel like they missed out on it. And let me show you the chart that I had for it.
Mm-hmm.
Oh, by
Go
the way,
ahead.
I looked at Amazon. It's 23% off the high.
Wow. Correct. In the
So
case of
here,
Google, it is 8% of the highs.
yeah, okay,
So,
yeah. Okay, now that I have that
and if we
ready.
are going to be talking about valuation support, at present, Amazon has way more valuation support than Alphabet. I can
In
show you the
theory,
multiples if you
sure.
want to, but
Yeah, no.
you're gonna
think that.
share.
Well,
Okay, there you go.
I think we all know that Google, since the middle of last year, is no longer the cheapest name in the Mag 7, and by many ways, it's the most expensive.
Correct.
So here we have the 5, the 13-day exponentials in blue and orange respectively, and then under that one is the 20-day simple. So, and then below here in these panes are RSI, the 14-day we were talking about, another one I like, MACD. It looks like we have a bearish crossover where the 5-day goes below the 13, and you lost the 20-day in the last 2 sessions for Google, which coincided with down here, you see MACD having a bearish crossover where the trend line goes below the signal, or the signal below the trend, I don't remember. But anyways, have a negative histogram now, and you have RSI get rejected at 70 and go down. I think you have some pretty clear downside in this name to 300, and I would expect buyers to step in there to defend this gap higher that it got at the end of last year around November 24th.
Right.
So you could short this to 300, I assume, but I think that's when you have buyers step in.
Gotcha. Let me share my screen with you so I can show you something about the report, because there is something that stood out to me. Oh, let me see. Okay, hold on. So look, the report was impressive. So record revenue.
I think this was the
130
best of the 7.
Correct. So I mean,
except maybe Meta. Meta was cool too, but
so
for a
what's
different
not
reason.
to like here, bro? $113 billion on revenue. Revenue went up on a year-over-year basis, 18%. Impressive. But take a look at this, and you will notice something that, for the most part, took place as well in the case of Amazon. Net income, nothing to complain about. $34.45 billion. But look,
excuse me.
Net income stopped growing, bro. It's kind of flattish.
Yeah, stagnant, flattish.
Correct. So the same thing happened with Amazon. So they keep investing and investing and investing and investing on artificial intelligence and stuff. And the markets are like, okay, guys, hold your horses. Relax a little bit, because I am not seeing a huge increase in profits. And by the way, speaking of Jensen, you saw the interview on CNBC. He said that the best use of artificial intelligence as of now is being carried out by Meta.
Yeah.
So, revenue keeps growing, but I mean,
before we get too far away,
we cannot complain about we can't make any complaints on a company that is making a net income on a quarter of $34 billion, but
right.
But you know,
so before we get too far away from Meta, the reason that was so impressive is because Zuckerberg went on the call and basically was explaining that with help of these large language models and these AI agents, they've been able to take projects that would require a team of 10 and whittle that down to a dedicated group of 1, 2, or 3. And it's that kind of reduction in workforce, that kind of boom in productivity that AI can enable certain companies that makes it worthwhile. I guess the interesting thing, though, is I don't know, and I don't want this to come off as like alarmist, but I don't know if you can achieve that in every business. Like Meta does a lot of advertising. They're trying to optimize.
Comes from
right,
digital ads.
Right. So like those teams, if you have an AI that can do the work of a grunt worker, the same way a bank could maybe have an AI agent do the work of like a standard grunt worker that crunches numbers, then yeah, instead of having an internship or hiring class of 10, maybe you only need to have 2 or 3. So, I mean, it's not everywhere, but it's certainly in some areas. And I think that's why, in my opinion, between Meta and Google, it's hard to determine which had the best, future-looking quarter.
That's it. In the case of Alphabet, this is no longer a cheap stock, at least relative to itself. I mean, it is trading at a premium relative to the S&P 500.
30 is not cheap by any standard.
Correct. Okay. And take a look at the price of sales, all-time highs.
That might be the scariest thing. That might be. I don't mind 30 times earnings, but 10 times sales is kind of crazy.
And remember, now the markets are dealing with the uncertainty of the way that an expense of $140 billion could be affecting the net income of the company, the free cash flow. So I don't know. I am not
Yeah.
bearish on any of these companies by any stretch of the imagination, but I have to say and I have to admit probably that the guidance that these two companies provided on capex, I mean, I am still digesting it. Let's just put it that way. Yeah.
I mean, listen, no one wants to be invested in a company that's going through a capex cycle for exactly the reasons that you're talking about. It takes away from net income. It's not
Mm-hmm.
in free cash flow. It's not a great time to be invested. People, I mean, I think there's literally a strategy where you look for companies that are coming out of their capex cycle because that generally is the bottom in their earnings if
Mm-hmm.
the investments have paid off. Of course, timing that is extremely difficult because it's hard to know what time frame the market is pricing future earnings at,
Yeah.
right? So, who knows? Maybe let's just say, like, for illustrative purposes, the top in capex is going to happen in 3 quarters, and you're like, all right, I'll wait for it to happen in the data, and then I'll buy. But what the market might do is that if you report it tomorrow and it's like, hey, deceleration in capex, like, oh, it's happening, and they're going to price in 3 quarters today,
Mm-hmm.
and that's the difficulty of it. And when you have companies like, and here's I guess to close my closing thought on the capex digestion, which I think you're making a good point because stocks like Amazon, Microsoft, um, we'll focus on those two,
Mm-hmm.
are probably dead money for at least the next 90 days, till the next quarter.
Till the next
I'd
quarter.
be
Mm-hmm.
shocked if something like really changes the narrative there. But maybe Nvidia, I don't know. But not that they would do this. But if Amazon, because Amazon on their call last night said that for every single data center, every single node they put up for AWS, they have someone that's looking to utilize it. If they were to step away and just stop building tomorrow, do you know how much money they'd be minting again?
Yeah.
Like if they just turned off the capex,
Yeah. Then
they'd
to
have a crazy amount of money and they would benefit from what they've already made. So I think
correct.
what's
If
and
you
don't get me
stop
wrong,
the
they wouldn't.
cycle, then restarting
Yeah.
the cycle would be
Well, if you
even
just
more
stop,
expensive. Yeah.
if you just decided, like, you know what, we're happy with the build out that we have, and if we end up getting overtaken by a competitor that keeps building, so be it. All of a sudden, the free cash flow comes back. Like, none of these companies have put themselves in a position where they can't stop on a dime. I mean,
Mm-hmm.
these things are battleships. It takes time to make these decisions and actually do these things. But many of them are in a position where if they wanted to stop spending money on this, they could tomorrow. It's just they know that if they do that, the risk is that they get left behind. And they're not willing to
That's the
take that
fear
risk.
behind this. Like
Yeah.
it's an arm race, and whoever invests the lesser amount of money is going to be
Could
losing.
lose.
Yeah.
Could lose.
Yeah.
Yeah, I mean, I think Zuckerberg still, not Zuckerberg, sorry,
Bro, it's
Amazon.
crazy. So last
Yeah,
year,
go ahead.
both of us, I mean, probably more in my case than in your case, we were criticizing Apple because they were not investing in AI, and
Yeah,
it ended up
right.
being the right thing to do, right? So
Yeah,
Apple looks great as of now. It's crazy. So the markets are like, okay, you are not investing in artificial intelligence. Oh, awesome! Let's buy your stock and let's punish the stocks that are in this arm race about artificial intelligence. So it's crazy. Who could have thought that, right? So
Yeah, I
that's the
mean,
way that the markets.
just
By the way, let
for
me take a
those.
look at it. I think go ahead. Let's review
Yeah,
Apple.
no,
Of
I'm
course.
just showing people we're back to 280. You made a new high, you made a new all-time high. You kind of double bottomed around 244, which was the low in October of 2025. It looks like. Um, oh, sorry. This is a this is a larger chart. Anyways, but I mean, you're within 5% of your all-time high of like 288 intraday basis. You're above the 50, the 100, and the 200. And if you look at the smaller time frames, just to look at MACD and RSI, your MACD is bullishly separating. Your RSI is knocking on the door of 70. I would bet that this blows off the top and you end up making a new all-time high in Apple, assuming that the narrative stays the same. But I mean, listen, I'm
I gotta
just
ask
going
you
to be
something
honest.
about
Yeah.
Apple. So,
Yeah.
do you think that Apple could definitely not invest at all on artificial intelligence and remains like some sort of a middleman, Like, okay, you guys do the artificial intelligence, I will be providing it.
Right. I think that's
So
kind of what they've decided to
that's
do.
interesting because why not? I mean, the stock is almost at all-time highs.
Yeah, I mean, Apple
So
has the
so
benefit.
say that
Mhm.
you are Tim Cook. Why would you start investing in artificial intelligence now when you're seeing all of these stocks falling off a cliff? Precisely
Well,
because they are investing in a very aggressive fashion in artificial intelligence. So there's no incentive to do it, right?
you wouldn't, and what's even crazier, and I think this is why Apple can make a new all-time high. I know that for those that followed me into the trade, I finally decided to close most of
I
it. Just
close it, by the way. Yeah.
there's so many other
Mhm.
things on my mind. I don't really want to be involved as I was before for another 5 or 6% with everything going on next week. But as Apple, you are the gatekeeper to a user base that is much more affluent than the average other company's user base. People with Apple products tend to be much better well off than your normal person. And not only do you not have to invest in AI, you can ask Gemini or Google to pay for the privilege of being on their service. So I
Uh-huh.
think I know they haven't disclosed the relationship between Gemini and Siri with respect to like what the economics are, but I think it's going to be very similar to what Google did with Chrome on the iPhone, and they're going to pay them for the right to be the partner that makes Siri, not useless. I think if you wanted to buy Apple, you could. It's just I got so many other coals on the fire. I'm not interested in holding it there.
Yeah. But the share looks very good. And it looks like, yeah. I mean, if the markets keep rising and all of this, tiny correction that we saw during the week goes away, yeah, this stock could be leading the way up.
Yeah.
I'm potentially making a brand new all-time high. It's possible. Yeah.
Yep.
100%.
Yep.
Yeah.
So we have a handful of names from the
From the Discord, they
the
were asking,
community.
right?
If you want to just go over them.
Yeah. So the guys were asking in the Discord about on VRT. Is that Verif Holdings or
Yeah, you got it.
okay? Do you have a technical chart for that, or you
I
want
could
me
pull
to?
that up. Sure,
Okay.
not a big deal.
I
Let's
guess I
see.
mean, taking into account the name of the company, this is a data center AI related company, I
Yeah.
guess.
So if
I
hold
mean,
on, I
if you
clicked the
happen
wrong
to be
button.
familiar with the ticker,
Yeah. I mean, Vertiv is they do data center cooling. I mean, obviously these things require a lot of energy. Got to cool down the chips to keep them from overheating, as well as to maintain your optimum performance. So they're doing all the cooling. This is a 1 year chart with the 5 and 13 day exponential and the 20-day simple. Today it opened at the 20-day and is
it's
just
going on a chart
rallied
today,
through.
Danny.
I know if I don't know when I look at this
So
chart. Also, sorry, MACD went positive today. That's big. RSI is going back to 60. When I look at this chart, Alvaro, honestly, I would just wait for the burst above 200. I don't want to get in the way. What do you see?
I mean, if all of these companies are up guiding on capex,
Yeah, I
and
see what you're
this
saying.
this company is so related, to
Hmm.
the space. So instead of buying Google or Amazon, you should be buying a company, the stock of a company, potentially, right? Buying the stock of a company that is a direct beneficiary of all of this super higher than expected capex, right? I mean, this is a very good looking
Yeah,
chart, man.
it's a six now. I've made it 6 months so you can see it a little bit better. I still would wait till it breaks above 200. I don't see the point in trying to
Yeah,
get ahead of it before
it
then.
is almost at all time highs. I have the 5 day moving average at $186. I
Yep.
mean, I have no complaints about this technical chart. It looks very good.
Hmm.
This is a clear
Yeah.
uptrend above all the moving averages, and
Yeah.
I'm
Yeah. You just got to get above 200. Hmm.
correct. Um, yeah, very good looking chart, and a potential beneficiary of
Oh, it's
all
it's a
of the
definite
crazy.
beneficiary. It's a definite beneficiary. It's just a matter of if the market's willing to price that in. I mean, you said it earlier. Nvidia is up 5% today, or something like that.
Yeah,
So
it is
market's finally
it
figuring
is
it
helping
out that
out
wait, people are still buying Nvidia chips. Who would have thought?
and Nvidia started to
Um,
go even higher once Jensen came on the
yeah,
air on CNBC, and he started to pump everything.
yeah, it's
He
up.
pumped and he pumped Meta. He was also saying that OpenAI and Anthropic are killing it. That they're
Yeah, he
making a
was
lot
very
of money.
complimentary of everyone. just so everyone has a
Correct.
live look on
And he
Nvidia here.
clarified that there's nothing wrong between Nvidia and OpenAI, so that is also
Yeah, I think
something
it's I
worth
think
pointing
it's
out.
I think we've definitely reached the point where everyone has become an expert or like a reader on the OpenAI relationships, and I'm like, you understand you probably know nothing, right? Like these things are kept so close to the vest that I have a hard time believing some of the reporting I hear from like the information and some other people that are it just seems so spiteful. I don't know.
Yeah,
It's my
Nvidia
my opinion.
reports. Yeah, I mean we are like what, like 2 weeks and a half from Nvidia's report, I think.
Yeah, hold on.
So I mean the stock is the stock is dead money, Danny. This is dead money
It's been dead
since
money. Yeah, I mean, it looks like
July of
they
last year.
report on the
So
25th. Here's a 2-year chart. It stopped. Let's just say it kind of stopped going up in July of 25. Yeah, yeah,
yeah, the valuation is super attractive. But I don't know. I mean, the average reaction during the current earnings season has been to the downside. So I don't see
yeah.
any reason why. I mean, it doesn't matter what you report. So you go down. You report good. Maybe you. I mean, if the
You go
report
up for
comes
a
out better
day.
than expected, you
Go
go
up for a
you
day.
go up. For a couple of hours, and then the markets punish you. You go down, and if you report worse than expected, oh boy, that's when you
Hmm.
see the brutality of these markets. So
Yeah.
they punish you. Take a look at
So
what
real
happened,
quick.
for instance, with PayPal.
Yeah.
Unbelievable. But in the case of Nvidia, let me show you
Well,
this.
it's up
Yeah.
7.7%. I just wanted to show that it's en route to close above the 20-day,
Mhm.
which is a pretty material move for the stock. It looked like it was tapping the bottom of the trading range around 170. So good day for
Yeah.
Nvidia.
So
Could be a great close for Nvidia as well.
yeah, and we've been talking about this. So guys, if you're really an Nvidia bull, this is all you need to see. It is trading at 26 times forward earnings, and this is one of the companies in the entire world that is growing at the fastest pace. So, if you're an Nvidia bull, uh, this is what you want to see. This is a buy the dip opportunity. It's just going up in late February when they report. I think it is on the 25th. I mean,
Hmm.
that's anyone's guess. I don't know because the
It's
stock has
25th.
been
Yeah.
dead money for 6 months or 7 months. But take a look at that valuation. Oh, by the way, Jensen also said today that he is expecting capex to be very aggressive by hyperscalers during the next 7 years. So, I mean, he's pumping his own business, of course. So, what is he gonna? What? So that is what he's supposed to be saying. But if Jensen happens to be saying the truth, I mean, this stock trading at 26 times forward earnings could be a super buy opportunity.
Yeah.
That's it. There's not really much to say about this. But
Hmm.
the thing is that I mean it's been dead money for quite some time. But the company's killing it. I mean, there's no doubt about it. But no
Without a doubt.
report of Nvidia seems to be able to convince the market. Take a look at
I mean, the
revenue.
bar is like impossibly high. It's tough.
Yeah, but bro, I mean, we cannot make this up, Danny. So, bro, 62% on revenue growth on a year-over-year basis. This is,
Hmm.
I mean, we're talking about probably the largest corporation of the world. This is this is nothing short of extraordinary.
Hmm.
Unbelievable. So there's nothing to complain about Nvidia. Take a look at the profit margin, bro. At the gross margin, 73%. It actually went up on a quarter-over-quarter basis. It's
Hmm.
unbelievable. Take a look at
Yeah, I
the net
mean, it just
income.
means the execution is going so well because the only hiccup they had was when they had some issues with the racks. I think when they were going over to Blackwell.
Yeah.
This is it. They just no hiccups. Ruben's on schedule, and if it's on schedule, it's going to keep going that way.
So the bears keep talking about competition, and this is something that
Hmm.
I talked about with Dave Nathan in December at the Nasdaq market site.
Hmm.
What competition are you talking about? Gross
Hmm.
margin is going up quarter over quarter. Where are the competitors at? Come on, it's bullshit. Yeah, at some point the company will have tough competitors, I guess. But you cannot
Oh,
say that the competition, that competitors are, closing in when gross margin is going up.
yeah,
I mean,
yeah.
this is bullshit.
The sad thing is, it's like the people are just trying to find a way to say that Nvidia is really just competing against its past self. It's like, yeah, of course. I don't know. It's all relative, but the idea that anyone's actually competing with them is they're competing with the U.S. government and the Chinese government. That's who they're competing with.
So
That's their obstacle.
at
I
some
mean,
point in time, Danny, and I am not making any prediction or any predictions about this. At some point, we will see a quarter in which Nvidia will be missing on either revenue or EPS. But we've been saying this during the last, or not in my case, but the bears have been saying this during the last 3 years. It hasn't
right.
happened, and on top of that, gross margin went up quarter over quarter on the last reported um, earnings of Nvidia. So I don't know. I think the company deserves the benefit of the doubt. But
Of course
I
they
mean,
do.
you guys have seen, you've seen what has happened here, bro. So they keep beating the estimates, and the stock isn't doing anything. So the markets are simply, I don't know, I guess, skeptical about this. I mean, what else can we say? But if
Mhm.
you are an Nvidia bull, this is what you want to see. I mean, even then Nathan admitted that. I mean, he told me I told him, bro, you need. I mean, we can make a case here that there is valuation support. Then Nathan is the largest Nvidia bear out there in Wall Street by a mile, and he said yes, there is valuation support, but competition. The competition is coming. Okay, that's okay. But this,
I don't
I
know
mean,
from who.
this company trading at 26 times 26 times forward earnings. I mean, yeah, you have to be a bird not to buy Nvidia
Well,
here.
this is another instance where I just think the market isn't stupid, but it can be wrong, and it's wrong. It is what it is. It's difficult because the only way you can phrase there being competition is like competition and growth rate. Like, let's just say, like, because in theory, eventually, like, let's say year 3, when we get to 2030 or year 4 from now, in Nvidia's 7-year cycle, or in the 7-year cycle of building out these data centers, Nvidia's only growing revenue a lousy 60%. Maybe AMD is growing it at 100%, but it's off of such a lower base that it's kind
Relative
of a
to
joke.
Nvidia's figures,
Right,
right?
right. So
Mhm.
it's like, I don't know, is that actually competition? I suppose, but maybe you want to hedge your bets that way, but there's nothing wrong because I think eventually you could do some barbell stuff and say Nvidia is your value semiconductor. But if you want to see a semiconductor company that's really working well right now, it's TSM. It's right back at the all-time high.
By the way, he was asked because I think that
Mhm.
Wagner did a good job today
Yeah.
on the interview. So he was asked about the depreciation of Nvidia chips, right?
Oh yeah,
Which
yeah,
is
yeah.
which is a
Good point.
concern that our boy Michael Burry has been talking about, right?
Yeah, yeah,
In
yeah.
a
No,
very
this is a great point. This is a great point.
correct. So he said that there's no depreciation concerns
Yep.
because the ships, there's ships that are 4 or 5 years old.
Yeah, the H200s are still going for above sticker.
So the
Yeah,
prices are still rising. So that
yeah.
implies that the demand is insane, insane.
Hmm.
So the companies do not have to do a big write off because of the depreciation. And I mean, that's another bird case that you can make here, right? That they have been. So, so the Blackwell came out last year, and this year we're getting the Reuben.
So
But the
yeah, I don't
prices of
know
the
the
ships
exact
keep rising. It's
timeline, but
crazy
yes.
because the demand,
Hmm.
according to him, that's not what I'm saying.
Hmm.
According to him, the demand keeps rising. So
Yeah.
the price of the ships keep, the prices of the ships keep going up. So I don't know. That's what he says.
Yeah,
I'm just
yeah.
saying what he said during the interview, right?
Hmm. How about this? To close, I want to share with people this in case they didn't see it.
Mm-hmm.
This is the Cybersecurity Index, or ETF, the bug, with RSI. So yesterday it closed at 19.73. The last time it was that low was COVID. Yeah, guys, it's gotten officially stupid. go find yourself a cybersecurity stock and just buy a little bit of it. I'm not saying that it's gonna change your life in a week, but this is the most oversold it's been since we thought that we were all gonna die. And we're not all gonna die this time, and there's really no threat of that. So I would go ahead, find your favorite. Mine's CrowdStrike. I also like Palo Alto. I would grab a little bit of that and just come back. And if you're interested in CrowdStrike, I bought that yesterday. It's now back above the 100-week simple moving average, and if it closes where it is now in a little less than 40 minutes, it will have that weekly moving average back. So I just wanted to show people how crazy it's become. There's just no sense.
It's been an indiscriminate selling, and usually when that happens, when a whole sector gets destroyed, the way that software stocks have been destroyed, that is usually an overshoot. So a potential buy the dip.
Yeah, at first
Opportunity,
everything should do well, but then eventually the market gets picky about what's what. And the way that I go about doing it is thinking to myself, what is the concern? And the concern is that AI is going to erode earnings. What are the companies where AI isn't going to erode those earnings? I don't see it happening in CrowdStrike. I don't see it happening in Palo Alto. Another one I like is Palantir, because Palantir is actually using AI. I mean, there's valuation concerns there, but it's a different bucket in of itself. Toast, similar there, but we could go on and on. SoFi is another good example.
When it comes to bear case, we can make a lot of bear cases. So the other day I was thinking, it was on Wednesday, I think, what if the markets are anticipating a big collapse in the labor market? Most companies, like giving up on a lot of their software expense. But so we cannot make a case for that right now. It could happen, but
a lot
at present
happen.
This looks like an overshoot because nothing has broken in the economy.
I guess I'm trying to make the case that I'm trying to make the case that when I think of Adobe, you have the option of buying like a $300 to $600.
Yeah, but in the case of Adobe, the disruption case is like very obvious, right?
Exactly. I'm trying to make the point that the market probably isn't wrong about all of them, or about some of them, but like a company like Toast, the point of service for restaurants, it helps with inventory management, upselling customers, receipt management, all of the stuff that if you own a restaurant, you don't have to deal with. You don't want to have to deal with. The idea that after a 5 to 10 year relationship with them, where you've saved them a lot of money, you've been their partner, you've trained your employees to use them, that someone's going to walk up to the business owner, hey, I have this vibe coded solution from Anthropic. Let's do it. No business owner is going to rip that out to take a shot on something that really isn't proven past very specific top of mind use cases. And that's where I think the market is getting this wrong. Oftentimes when emotions take over, you shoot first and ask questions later. And it took some of these out to the woodshed. So
I think it was yesterday or on Wednesday. I was so amazed, bro, by the sell-off in cybersecurity stocks that I asked ChatGPT, like, "Hey, bro, I am about to start a new company, a new endeavor. Say, can you take care of all of my cybersecurity concerns?" And ChatGPT replied, like, "No, you need to reach out to a cybersecurity company. I would recommend Fortinet." Then
we don't want that smoke. Please don't ask us. But I
asked ChatGPT, bro, like, "Hey, can you take care of my cybersecurity stuff if I start a new company?" No, you need to reach out you need to reach out to a formal cybersecurity company. I cannot do that. I cannot handle that.
Well, that to me is the easiest one. Could you imagine going up to
because in some cases the sell-off is like very obvious, like Duolingo, bro. I mean, come on, who's gonna be using Duolingo?
It's very clear, very
correct,
clear.
Exactly.
Yes, another good example. Like you said it really well though. Could you imagine if you went up to like Delta Airlines, and because we know they use CrowdStrike and still use CrowdStrike, even though the outage,
they even sued the company, but they're still using.
Well, they're still working together, man. So it is what it is. Let actions speak louder than anything else. Could you imagine if someone's like, "Hey, how about this? Instead of focusing on flying planes and optimizing your logistics to better competitors, how about you take some of those resources and become a cybersecurity expert?" No one's going to do that.
No, forget it.
They've already made the decision to outsource it because they know that if they're not specialists in it and they fail there, they have nothing to cover their own asses when stuff blows up. And they would rather pay CrowdStrike so they could blame CrowdStrike if something goes wrong than face plant on their own if it's their fault. And they know they're more likely to screw up than a specialist. So there are still some very mission critical things, and like mission critical, cybersecurity is mission critical to everything, but there are other operations depending on your business that are mission critical. I just have a hard time, as someone who my father was a business owner, an entrepreneur. As an investment banker, I met a lot of doctors that were their own entrepreneurs. I have a really hard time believing that if you they would think it's a joke if you were to suggest you rip out something that was mission critical after having a strong relationship with that other company for a decade plus, just because AI, bro. That's just not how people in the real world really work.
And I guess that both of us, and before we wrap it up, so both of us can agree on the fact that maybe there's something that the markets are suspecting that we cannot see at face value. And in 3 months, we're going to be saying like, hey, do you remember when software stocks were getting annihilated? It was because of this. But at present, and despite the fact that the net aggregate opinion of the markets or the technical charts look very ugly, this looks like an overshoot. We'll see what happens at the end.
Yeah, and here's the thing, and I just to close, because I want to be clear, I've been like pounding the table on the RSI thing and all this other stuff. That to me is just a signal that it got sloppy and got overdone. Now, it could get worse. Next week, who knows? We could get another thing. I don't know. Anthropic just cured cancer. And if it did that, then you know what? Okay. Like, I don't care what the market does that day. It's a great day. But Anthropic is amazing. And then the IGV makes a new 52-week low. And we have to really, you start thinking about it in a real way. Or we could just get more of the same news and we revisit. Like, the news coming out of the sell-off yesterday was that it was a massive deleveraging event for hedge funds. Now, typically when that happens, you see the...
we had a lot of risk of, signs, Bitcoin getting annihilated and concerns about micro tragedy and whatever, but, So those concerns are behind us today. We'll see what happens next week. So
Exactly, but it's so ethereal. I guess what I'm saying is it's no guarantee that next week we don't panic again.
Correct.
It's just to say that we're
because
probably
there's
closer
an irrational
to a bottom
element
than
to
we were
it.
before.
So it could be triggered next week as well. Yeah, of course. Yeah. It's risk. Yeah.
All right, everybody. Thank you so much for stopping into episode 31 of Charts and Checks. If you're here, you know where Alvaro is. You can go into the description box below to find me, as well as the Discord where we're fairly active. We actually recently invited Don Lett. Welcomed.
Yeah.
Don
he
Lett
joined our community
into the Discord. He's been awesome, sharing some really cool charts.
So
it's fantastic. He's fantastic.
Fantastic.
We're happy to have him alongside us. So
awesome.
Yeah.
Hey, bro, enjoy the game.
Thank you so much.
Let's go Patriots or what?
Let's go. Who cares? Let's go Seahawks. Let's go Patriots. I'm honestly, we'll see. I'm gonna put money on the. I'm probably gonna put money on the over and just root for offense. Because if I'm going to be there, I want to see some, like, I don't want to see a defensive game. I want to see 80 yards.
The last Super Bowl was horrible, man. It was a one-sided game.
Oh yeah.
It wasn't exciting at all. So hopefully
I just want a great football game.
We get a good game on Sunday, hopefully.
I want Bad Bunny to have the best performance of his life. And
Green Day is going to be playing as well, I think.
Is it actually
it's Bad Bunny and Green Day, yeah.
That's hilarious.
Yeah, hopefully Bad Bunny doesn't.
Super Bowl,
he's in the potted before he gets on the stage.
That's hilarious.
Green Day is going to be playing. It's a nice.
Green Day
is going to be playing.
Yeah, I like Green Day. Why not?
It's going to be fun. It's going to be fun.
It's going to be a
have
great
fun.
Time.
And for our boys and girls of Boston and Seattle, we love you. We love you all.
Yeah, but you've had it too good for too long. So just relax if you don't get another parade.
But just in case, we have people watching the podcast in Seattle and Boston. So we love you guys.
Yeah, we like Drake May. All right, peace out, guys.
Take care, guys.